Hey everyone, and welcome back to the channel. If you're seeking smart ways to grow your money in Singapore, real estate investment trusts, or S-REITs, are definitely a fantastic vehicle for both yield and diversification. September 2025 is shaping up to be a compelling month for S-REITs. Global economic trends, whether it's interest rate expectations or ongoing market volatility, could have a direct impact on your portfolio. If you're tracking attractive dividend yields or hunting for resilient assets, this is definitely the season to pay attention. The Singapore REIT sector has shown resilience this year, with indices rising on expectations of rate cuts and improving economic sentiment. Most S-REITs delivered steady results for the first half of 2025, despite some areas of softness. While the second quarter was a bit soft, analysts are now forecasting a 4% average increase in distribution per unit for this year, so a turning point seems near. Sector valuations remain attractive, with the FTSE ST REIT index outpacing broader Singapore stocks recently. Key developments include more overseas diversification, upgrades in property portfolios, and a clear focus on defensive asset classes like logistics and healthcare. Let's get right into today's deep dive, the top 3 Singapore REITs to watch this September. We've analyzed the latest results, market reports, and news to pick 3 standouts combining stability, growth, and defensive positioning. Before we begin, remember this is for educational purposes only. It's not financial advice. Always verify your research and consider a licensed financial professional before making any investment decisions. All right, let's explore these 3 standouts. First up, we have Keppel DC REIT. This pure-play data center REIT manages 24 facilities spread across 10 countries with assets worth over $5 billion. It's seen strong portfolio gains, with gross revenue surging 34.4% and net property income rising 37.8% in the first half of 2025. Occupancy is robust at 96.5%, and the weighted average lease expiry, or WALE, is 4.7 years. A recent standout achievement was a 51% rental reversion on major contract renewals, really showing strong tenant demand driven by AI boom and cloud computing expansion. Keppel DC REIT's interest coverage stands at 5.9 times, and leverage remains a safe 30%, well below regulatory limits. The trailing yield is about 4.5%, backed by a distribution per unit of $0.051333. Management is actively guiding Keppel DC REIT through strategic divestments, new acquisitions, and portfolio rejuvenation, including inbound deals from Europe and Asia. By 2030, forecasts suggest AI-related workloads may make up 70% of global data demand, positioning this REIT right at the forefront of sector growth. Next, let's look at CapitaLand Integrated Commercial Trust. This is Singapore's largest commercial REIT, anchoring retail malls, offices, and integrated developments across Singapore, Germany, and Australia. Its portfolio stands at around $26 billion. For the first half of 2025, gross revenue rose 1.4%, distribution per unit increased 3.5% to 5.62 cents, and occupancy sits at a healthy 96.3%. Rental reversions averaged a strong 7.7%, notably led by its suburban malls. Strategic expansion has continued, with CapitaLand Integrated Commercial Trust recently acquiring the remaining 55% of Capital Spring, one of Singapore's prime CBD office towers. This acquisition should be immediately DPU accretive and secures full ownership in a premium asset with anchor tenants like JP Chase. Financial health looks solid. Leverage is kept below 40% through disciplined equity fundraising. Average debt cost dipped to 3.4%, and 19% of borrowings are on floating rates. This positions CapitaLand Integrated Commercial Trust well for those upcoming potential rate cuts. Finally, for those prioritizing stability, we have Parkway Life REIT. This is Asia's top healthcare REIT, owning 75 properties in Singapore, Japan, France, and Malaysia, valued at $2.46 billion. Defensive by nature, it truly benefits from stable demand regardless of market cycles. In the first half of 2025, gross revenue increased 8.1%, and net property income reached $73.8 million. Standouts include 100% occupancy in Singapore and Japan, plus an extraordinary WALE of 14.91 years, providing superior income visibility for the long term. Financially, Parkway Life REIT is robust. Its gearing is 35.4%, interest coverage is 7.64 times, and 97% of interest rate exposure is hedged. There are no major refinancing needs until September 2026, and the trailing DPU yield is about 3.6%. A key catalyst to watch for, the new 20.4-year lease secured for its Singapore hospital properties, running through 2042. This move is poised to boost rental income by 24.4% from 2026, with DPU expected to jump a substantial 27.6%, a powerful future growth engine for Parkway Life REIT. So let's compare these three picks for September 2025. Keppel DC REIT offers high growth potential, leveraging digital transformation and the AI boom. CapitaLand Integrated Commercial Trust provides stability and strong fundamentals reinforced by strategic acquisitions. And Parkway Life REIT is the ultimate defensive income play, focused on long-term stability and healthcare resilience. Singapore's REIT sector is looking optimistic as rate cuts loom and fundamentals strengthen. Defensive assets like healthcare, logistics, and data centers are well positioned if global uncertainties persist. Meanwhile, retail and office assets are set to benefit from economic reopening and increased consumer activity. Remember, when you're considering REITs, think about diversification across different sectors and countries to lower overall risk. Decide if you're looking for consistent income or more potential for capital appreciation, as some REITs lean one way or the other. And always keep an eye on broader economic trends like interest rates, inflation, and global liquidity, as they can really sway sector performance. For investors tracking income dates, distribution season peaks this September, so make sure you're on top of your holdings and payout schedules. Also, stay tuned for upcoming quarterly results in October and November. They may reveal new value opportunities and sector rotations. To recap, Singapore REITs remain attractive as defensive, income-generating assets amid global change. Our three sector standouts for September are Keppel DC REIT, CapitaLand Integrated Commercial Trust, and Parkway Life REIT. Always focus on your research, diversify smartly, and align your choices with your personal financial goals. Remember, thorough due diligence and professional advice are crucial in every investment journey. If this video provided value, please hit that like button, subscribe for deeper financial insights, and share it with fellow investors. Thanks for watching and happy investing. I'll see you in the next video.